Hello traders at CMC Markets. Welcome to another update for Monday, 27th of February. I'm recording this at the end of the week before. My name is Trevor and I'm broadcasting to you from London. In this week's session, I'm going to start off by looking at the RRG charts, the relative rotation graphs of the major global indices, as we always do. Then we're going to drill down and look at and follow up on some stocks we've been talking about in the UK and in Germany. And also a look at the dollar, what's developing in the dollar, something we started to talk about. And then there is a special chart I'd like to show you, this being the anniversary of the invasion of Ukraine, and look at what has happened to the energy markets. It's quite a surprise. I would have said that 12 months ago, if you were to say that Russia's going to invade countries in the heart of Europe, and the war a year later will still be grinding on and being more intense, seemingly getting more and more intense, you would not have expected the energy market prices to do what they are doing currently. Now, the first chart we're going to look at is the relative rotation graph. This is the weekly sampling of it. Here's the Hang Seng swinging around here, but we track this right round from here. But it's now furthest to the right, losing a little bit of momentum, but it's still very, very strong indeed. We've got a little bit of an improvement in the American stock indices, the Nasdaq, the S&P, the Russell, the Dow, which had on its own been holding up rather well, is weakening, but we've got the direction of the other three broader indices is a little bit improving, but nothing to shout about yet. We are going to look at the FTSE in some detail, and we're going to look at the DAX stocks that Julius picked up yesterday, two in particular, which were close to breakout points. I want to show you what has been developing there and what the opportunities could be for those. Now, first of all, here's the FTSE chart. We made that break to new all-time highs, and then we have touched the 8,000 level. We're still just a little bit below it, but we're very, very close to the 8,000 level. It's a good-looking chart, higher lows in place, and then we've got a steeper uptrend with higher lows in place too. We are holding above the previous high of 2018. The RSI is generally rising here, but slight loss of momentum in the short term. The MACD, however, after its big reversal, has turned up very, very nicely indeed. And the gap between the MACD and its signal is widening. This is very encouraging indeed. Now, this is a weekly chart of Centrica. And this was one that we picked up some weeks ago, and we were talking at the time about a potential breakout through 92, and then this will put in this terrific base in here. You could argue it's a reverse head and shoulder, head in here, but anyway, this has got a rising uptrend in it. We broke it, hovered around a little bit, but now we're pushing away rather strongly, and the market does look as though it's starting to fulfill its potential, where it's got a nice gap between here, where we are now, as we go through 100, up to resistance which starts at 130. This fall was very, very fast indeed, therefore it will offer no resistance on the way up. The MACD is positive, as you would expect. RSI is a little bit hesitant, and a little bit of a declining highs pattern here, which is a bit of a warning not to get overexcited in this, but it is looking good. The chart is looking very good base at the very, very least, potentially head and shoulders, which would have a count up to about 160, but in front of that we have resistance at 130, but we've got a pretty clear run before that. So this one still looks extremely good, and with potential for the 130, but we'll have to see how it behaves in that consolidation area up to 160 if we do indeed get there. Worth looking at again, if you haven't looked at it, is Shell, or Dutch Shell. It's a weekly chart here, and we've got this long uptrend line here with a nice series 1, 2, 3, 4, at least 5 higher lows in place. We started to talk about it when it was challenging the 2,400 level. It burst up from there up to 2,560, and then it's putting two tops at that point before the next level of resistance at 2,600 and the high up to 2,750. But once again, with this very slight weakness that we've got in it now, the RRG lines, the momentum and the RRG ratio lines, both hooking up here. So this is a good moment for this. The MACD is also hooking up here. The MACD is crossing up through its signal line at this point here, and the RSI is in this triangle that we drew the last time here, lower highs and higher lows in here, tightening up here, and nearer the top than the bottom, but no reason to say this is going to break imminently. But if it does break up, then this could release a lot of energy on the upside. So it's looking still looking extremely strong. It's got these resistance levels that it's tackling now. We're having a minor pullback at the moment. Two tops in place. That's the 2,565. Watch out for that. Not a double top, of course. It wouldn't be unless we broke through the 2,240 level, which would complete the double top. You have to break the low in between. It's just we're stopped at the same place twice, which is part of the journey of going up. So watch this one very closely. I think it's got more legs to it. Now here's the German DAX index. Moving up very strongly, as you can see, passing through this 15,000 level, punching into this big topping consolidation area, and doing it with considerable upside momentum. On the weekly MACD here, you can see the gap is widening in that MACD. There's increasing power as we punch into that resistance level, which extends all the way up to 16,300. The RSI is also punching up near its high, previous high here, so it's doing extremely well. Rising lows pattern in there. It's not pointing downwards, it's pointing upwards, so we still have good upside momentum as measured by the RSI. Looking now at one of the selections that we got from our scanning, looking for securities which are going up and have got a northeasterly direction, a 0 to 90 degree direction, and also have an expanding tail, so good looking securities. This one came up, early stages for it, but it is following through on it. This is SUSE SA in Germany. We've got these rising lows, short-term rising lows in here. We're moving towards resistance at 21. You could argue if we do break 21, we will have a reverse head and shoulders, shoulder, head, shoulder there, and that would give us an objective of 32. Up here, right up here at this resistance up in here. Just straighten out this line, actually, carelessly drawn there at the May high up in there, which would be a natural resistance level. This resistance level here is off a low, which is off on the left here. So it's looking constructive. Look at the RSI. It's pushing ahead nice and strongly in here. This is what we want to see, increasing momentum. We also see the same thing from the MACD here too, and so this is pushing forward, and the gap is widening between the MACD and its signal line. The indication being that the 21 level will break. If it does, this turns this into a big base, reverse head and shoulders type base, and that can support a substantial move higher, possibly as high as the high of April and May in there. So let's watch this one very closely. It's just a little bit early to do it. It hasn't quite gone yet, but it's close, and so let's pay attention. This one is CANCOM again in Germany, and this one also looking like it's forming a beautiful basin pattern here in this weekly chart. Low, lower low, lower low, higher low in place. You could argue that this is the neckline here. It's already broken, impulsively pulled back and started to move forward again with very good momentum. We can see this here in the weekly MACD. We see a very constructive looking RSI here, not hooking over in any way at this point, still increasing momentum to the upside. It's approaching resistance at 36. And then the next resistance is, I believe, 38.5. It has good power. Looks as though it's extending, likely to extend further. And you see the thing that's ahead of us here is the sort of golden ticket, really, in technical analysis. When you get a sudden drop like this and you start to push up through it, the move can be swift through this area here, up to around the 46 level in here. So. And that would also be, by the way, the measured objective from the reverse head and shoulders pattern. So this also looks as though it's the one that we picked up here is beginning, still at early stages, still a lot of potential for them, resolving in the way that we expected them to. Now, we've been watching the US dollar and that turn in the US dollar, turning up in the dollar index, down in the major currencies. We'll look at the euro in a moment. And here we see the euro in the lagging quadrant and heading more or less in a westerly direction here, so getting weaker, not looking threatening to move on the upside here, swishing around here. No, it's not. They're all crowded in the lagging quadrant here. The Swissy looking quite bad. The rand are looking really terrible. But let's concentrate on the euro for a moment. So here's the weekly chart on the euro. Here is this line, which I think we can draw now. It's a very long line. It's back from 2017. We've had this low, then we hesitated, bounced, crashed through it. Then when we touched it very recently, that's the euro coming up, the dollar weakening, and then it's reversed and maybe going back in the direction of dollar strength once again. Crucially, what has just happened is that we have so I'm magnifying here, we're just breaking down through this low 2020, breaking down there and starting to look really as though this could pick up some steam. Here's the relative, the RSI coming down very hard indeed, and here's the MACD hooking over, potentially crossing after this long run up here and ending this move. So this could be a big change in the dollar direction, starting now, and a resumption of what we saw in 2022 until the end, the last quarter of 2002, which was a strong dollar, a resumption of the strong dollar. And that, of course, will have implications for everything. On the anniversary of the invasion of Ukraine by Russia, how have energy markets performed since that, in that 12 months period? At the beginning of the invasion, which was a shock, I was saying the day before, it's not going to happen, they won't do it, they wouldn't be so stupid to do it. It turned out they were stupid enough to do it, and it didn't go the way it was planned. But given that it has ground on a terrible cost in so many respects, human of course, but also the infrastructure and the gigantic moves we had in the energy markets in Europe here, would you have at that time thought that we would be where we are today when the war is still getting on and potentially looking like it's going to escalate? Here's the performance of the European energy markets. So the coal is down 0.69%. Brent crude down 17% from this February 24th, 2021. German power, the one that was hit the hardest really, is down 14%. UK power down 61%. the natural gas, Henry Hub natural gas has halved, and Netherlands natural gas, which is the benchmark for European natural gas, is down 55%. Let me show you the drama of this, the full drama of this. Here's the coal, here's the German power, here's the Brent, here's the Henry Hub natural gas, here's the TTF, the Netherlands gas, and here's the UK gas down here, the biggest drop. But look at this, what happened here. So this is at 450% increase in German power, and then all the way back down to being negative performance on the 12-month period. I would never have guessed that, and I wouldn't. It's shocking. It's one. I've been around for a long time. I'm very old, as you know, and I've seen very few things do moves like this in the whole time that I've been in this industry. It's been quite remarkable. I'll leave it there for this week, and we'll thank you very much for watching. We will be with you again next week. It will probably be Julius again, and at the same time and same place. So it's goodbye from Julius and I at RRG Research, and may the trend be with you.